Dinar shift. The currency world is reeling from an announcement that has emerged from the heart of Baghdad, signaling a monumental shift for the Iraqi dinar. This is not a mere technical footnote in a financial report. It is a declaration from the Central Bank of Iraq, CBI, that appears poised to redefine Iraq's financial relationship with the rest of the world. For years, observers and market participants have keenly tracked every signal from the CBI, looking for concrete evidence of fundamental economic reform, and tonight, that evidence has arrived with unmistakable clarity. The magnitude of this policy change is immense, touching on everything from Iraq's monetary sovereignty to its integration into the high-speed global digital economy. The core of this historic decision centers on the confirmed launch of a completely new exchange rate system slated for 2025, a structural overhaul that analysts are unanimously labeling as the most significant financial modernization effort in the nation's contemporary history. This scheduled move from a long-standing system to a dynamic new framework is being interpreted across financial capitals as the definitive start of the long-anticipated revaluation countdown, a period of transformative change that has been years in the making. The Central Bank of Iraq explicitly confirmed earlier this week that it will be implementing a sophisticated new exchange rate management framework as a foundational element of its comprehensive 2025 economic reform package. This is a departure from a decades-long policy where the dinar's value was kept on a fixed or semi-fixed rate, primarily anchored to the US dollar. While that fixed peg provided essential stability during the difficult and necessary post-conflict reconstruction era, it inevitably imposed limitations on the currency's natural market flexibility and transparency, often requiring substantial government intervention to maintain the artificial link. The CBI's decision to transition away from this rigid structure speaks volumes about the country's growing confidence in its economic stability and resilience, indicating a strategic readiness to embrace the complexities of the international financial arena. This shift marks the end of an era defined by controlled exchange and the beginning of a future where market forces will be the primary determinants of the dinar's true worth. CBI officials have now declared their intention to adopt a significantly more flexible, market-driven model for currency management. This simply means that the valuation of the Iraqi dinar will soon begin to respond more acutely and organically to real economic indicators, such as the nation's overall trade balance, the strength and size of its foreign reserves, and genuine market demand for the currency. This is a profound statement of self-assurance, showing that the Iraqi government is now willing to allow its currency to become a more accurate, living reflection of the country's inherent fundamental economic power. Furthermore, such a significant transition in currency policy is universally understood by international financial bodies as a strong indicator of a nation's serious intent and profound readiness for deeper global economic integration, which is the precise trajectory Iraq is now mapping out. This development signals a new level of maturity in Iraq's fiscal governance and its approach to global trade. The new system that financial experts are referencing is specifically known as a managed float exchange rate regime. Under this model, the dinar's value will no longer be artificially constrained to a single unmoving number, but will instead be permitted to fluctuate freely within controlled, carefully monitored limits. This crucial element of oversight is what differentiates it from a completely free float, ensuring that the central bank retains the necessary tools to intervene and prevent excessive volatility or speculative attacks that could derail the reform process. The Central Bank of Iraq will institute daily, rigorous monitoring of all exchange activity, relying on real-time data gathered from both regional and major global currency markets. This sophisticated, proactive approach is specifically designed to allow for the dynamic, organic growth and gradual appreciation of the dinar, while simultaneously ensuring and maintaining essential monetary stability. This strategic balance between flexibility and control is a hallmark of the monetary policy employed by many of the world's most developed and powerful economies. Crucially, the implementation of this managed float system dramatically enhances transparency for the Iraqi currency, fulfilling a long-standing request and objective of many of Iraq's major international partners and financial institutions. The technological infrastructure for this transparency has been meticulously put in place. Iraq's new digital trading systems are now fully connected to major global platforms, most notably the SWIFT network, as well as regional settlement systems like Buna. This critical technological integration means that the Iraqi dinar will very soon be trackable, visible, and fully tradable on the same international screens used for all other major global currencies. This is an absolutely enormous operational and credibility leap forward for a nation that has been systematically rebuilding its financial standing and internal controls over the past decade. It positions the dinar not as an isolated local currency, but as a fully compliant participant in the high-stakes global marketplace, opening the door to unprecedented levels of foreign engagement and investment. The critical question remains: why is Iraq choosing this precise moment to enact such a monumental policy change? The answer is rooted in a deliberate and extensive period of preparation that has been underway for several years. Since at least 2023, there has been mounting and sustained pressure from both powerful domestic reformers within Iraq and its network of international financial partners to aggressively modernize the nation's aging and vulnerable economy. Key global players, including the United States Treasury, the International Monetary Fund, IMF, and major global banking institutions like JP Morgan and Citi, have been working in close continuous collaboration with Iraqi authorities. Their joint mission has been multifaceted, focusing intensely on reducing financial corruption, staunching the flow of illegal dollar transfers out of the country, and comprehensively digitizing its entire national payment infrastructure. This concerted, sustained effort laid the essential technological and regulatory groundwork for the move we are witnessing today. These far-reaching financial reforms were never simply about mere compliance with global mandates. They were, in fact, the calculated, deliberate process of building the technological backbone and regulatory framework required for this exact moment of currency transition. With powerful new anti-corruption controls, modernized electronic payment systems, and robust new anti-money laundering (AML) frameworks firmly established and operational, Iraq finally possesses the institutional structure necessary to confidently support a global standard, internationally recognized currency. The synchronization of these reforms is not accidental. The timing is profoundly deliberate, strategically chosen, and highly suggestive of a major financial milestone on the horizon for those who have closely followed the dinar's transformative journey. This comprehensive preparation minimizes risk and maximizes the potential for a successful transition to a new, dynamic monetary environment, validating the years of hard work invested by both Iraqi and international partners. According to official statements issued by the Central Bank of Iraq's top leadership, the overarching fundamental purpose of this dramatic currency policy change is to decisively strengthen and assert Iraq's monetary sovereignty. While this term may initially sound like technical financial jargon, its implications are deep and profoundly political. It expresses Iraq's powerful desire for its national currency to stand entirely on its own merit, to be fully respected, recognized, and seamlessly traded internationally without any continued dependence on or vulnerability to a single foreign currency. For many years, the Iraqi economy was historically and heavily tied to the US dollar, a relationship that, while offering some transactional ease, also introduced a critical vulnerability to external economic pressures and policy shifts far beyond Baghdad's control. The move to assert this monetary sovereignty is the CBI's strategic attempt to fully restore complete control over its national currency policy, including critical areas like interest rates and inflation management. This bold declaration of monetary independence is a characteristic and essential hallmark of any nation that is successfully making the transition from a post-conflict or developing economy to a fully mature, stable, and self-directed financial system. In essence, Iraq is delivering a clear and powerful signal to the entire world community. It is entirely ready to take full charge of its own financial destiny and chart an independent course free from the historical constraints of foreign currency dependence. This strategic move is not just about the value of the dinar. It's deeply tied to national pride and economic self-determination. The new currency system is also meticulously designed to align with Iraq's much broader vision for the year 2025 and the years that follow. The government's national development strategy centers on economic diversification, the integration of technology, and the dramatic expansion of regional and international trade networks. As an integral component of this overarching national plan, Iraqi government planners have already launched numerous e-government and digital banking initiatives specifically intended to dramatically increase public faith and trust in digital financial transactions. The comprehensive modernization of Iraq's entire banking system, which includes the capacity for real-time payment monitoring and digital settlement of funds, provides direct and immediate operational support for this groundbreaking new currency framework. For the average Iraqi citizen, these digital and systemic upgrades will translate into significantly faster, demonstrably safer transactions, a sharp reduction in reliance on the shadow economy and black market exchanges, and a much more predictable and stable financial environment for daily life and commerce. For international investors, The signal is equally clear. Iraq is finally constructing the essential, robust infrastructure required to confidently attract and securely manage significant foreign capital inflow. A stable, transparent, and fully convertible currency is, fundamentally, the absolute bedrock upon which any successful, thriving modern economy must be built, and Iraq has demonstrably committed itself to achieving exactly that foundational strength. Now, let's consider the direct and immediate effects of this transition on the dinar itself. Under the parameters of a managed float, if Iraq's overall economy continues its current growth trajectory, if its non-oil exports substantially increase, and most importantly, if international investor confidence strengthens as anticipated, the fundamental value of the dinar is expected to embark on a gradual, sustained upward trajectory. This is a measured, organic process driven by genuine, demonstrable market demand, fundamentally different from the sudden, speculative, flip of a switch revaluation events often rumored in the past. The consensus among serious financial analysts is that this organic, market-driven path is far more sustainable and realistic for a long-term economic recovery. Even a gradual, measured appreciation of the dinar's value promises significant, tangible benefits for the entire Iraqi economy. It will invariably boost consumer confidence, strongly encourage domestic savings, and naturally help to reduce inflationary pressures that have historically plagued the nation. In the longer term, a structurally stronger and more respected dinar will make Iraq substantially less dependent on imported goods that are currently priced in US dollars, further contributing to the deep stabilization of domestic prices and markets. What lends such immense power to this specific announcement is the remarkable level of coordination that is clearly evident among all parties involved. For more than a year, senior US Treasury officials have made multiple visits to Baghdad, focusing intense discussions on the critical areas of exchange rate policy, digital transaction tracking, and comprehensive cross-border banking compliance. This suggests a deep cooperative engagement that goes far beyond simple policy advice. Simultaneously, major American banks have been quietly but actively upgrading their internal currency systems, with some now publicly displaying live rate tracking for the Iraqi dinar, an operational feature that was simply not present or utilized in years past. This technical action, while not constituting outright proof of a revaluation event, is a powerful, observable demonstration that the necessary infrastructure for international recognition and full tradability is actively being activated and tested. These types of quiet, highly technical changes within the global banking back office often occur in the months immediately preceding a major visible policy shift. The various operational pieces required for a seamless global transition are clearly and decisively aligning into a single, cohesive framework. This operational synchronization significantly de-risks the policy announcement. Furthermore, the public discourse has been intentionally and strategically coordinated. Iraq's Prime Minister and Finance Minister have recently made a series of noteworthy public statements, all uniformly stressing that restoring the true, rightful value of the national currency is an absolute prerequisite for Iraq to finally achieve true and complete national sovereignty. These are not mere random political remarks. When the nation's highest governmental leaders begin to systematically echo the precise vision articulated by the independent central bank, it is a powerful, unmistakable indication that a fully coordinated national policy is not only planned but is actively being executed. This level of comprehensive alignment between the fiscal authorities, the government, and the monetary authorities, the central bank, is absolutely essential for any successful, large-scale currency reform to take root and endure. Such a degree of synchronization and unified purpose has been notably absent in Iraq for many decades, suggesting that the entire political and financial establishment is finally moving in one direction, jointly pulling toward the shared goal of a stronger, more transparent, and financially freer dinar. Astute economic observers consistently point out that this immense progress is the cumulative result of years of meticulous and deliberate planning. Iraq has spent this time significantly increasing its vast foreign reserves, methodically strengthening its gold holdings, and proactively negotiating new regional trade partnerships that deliberately reduce its reliance on the exclusive use of the US dollar for all transactions. Every single one of these preparatory steps serves to build the robust, defensive backbone required for genuine currency independence. As Iraq's financial reserves continue their growth trajectory, and critically, as the nation's oil exports remain consistently strong and highly valued on the international market, The central bank gained substantially greater capacity and monetary power to defend and strongly support its currency's value against speculative pressure. When this structural strength is combined with a younger, technologically savvy Iraqi population that is actively seeking financial modernization and digital solutions, all the necessary ingredients are demonstrably in place for a genuine, lasting transformation. The global community has long been watching, waiting to see if Iraq could truly transform years of abstract promises into concrete, observable results. And now, all evidence indicates that they are finally delivering on that commitment with a structured, phased approach that inspires confidence. The potential impact of this new currency system extends far beyond Iraq's immediate borders, creating a geopolitical ripple effect. Neighboring economies across the region, including nations such as Jordan, Iran, and Turkey, are watching these unfolding developments with profound interest. If Iraq successfully manages its transition to a flexible exchange rate and succeeds in structurally strengthening its national currency, it could serve as a powerful model for neighboring countries that currently face similar economic vulnerabilities and challenges. This could, in turn, potentially spark a wider regional movement toward greater monetary independence, gradually reducing the long-standing, powerful dominance of the US dollar in key Middle Eastern trade and financial settlements. Some of the most discerning global analysts are even connecting this specific trend in Iraq to the broader, ongoing international shift that is actively being promoted by nations like the BRICS bloc, a movement aimed at achieving a deeper diversification of global finance and establishing a more balanced, multipolar system of international exchange and currency utilization. Iraq, with its immense natural resource wealth and its strategically vital trade routes, is positioned to potentially become a central and pivotal figure in facilitating this much larger, global-scale financial realignment. This places Iraq not just in a regional spotlight, but on the main stage of global economic transformation. It is essential to acknowledge that every major economic reform, without exception, comes with its own specific set of inherent challenges and risks. Iraq still faces the significant persistent threats of institutional corruption, critical infrastructure gaps that require massive investment, and a continued, strong dependency on oil revenues for the vast majority of its budget. The difficult and complex process of transitioning to a flexible exchange rate demands incredibly careful, expert management to proactively avoid sudden, destabilizing inflationary shocks or destructive speculative market pressures. However, there is a critical difference this time. Iraq is not navigating this challenging process in isolation. Influential international institutions like the IMF and the World Bank are actively providing continuous, specialized advice to the CBI on global best practices and risk mitigation, while the US Treasury experts are offering valuable oversight to guarantee compliance and transparency. This unprecedented level of direct, cooperative engagement from experienced global partners drastically reduces the inherent risk of policy failure. The physical and advisory presence of these institutions clearly demonstrates that Iraq's reform is not merely abstract political rhetoric, but a sophisticated, coordinated financial operation with deep international support and commitment. For the everyday Iraqi citizen, the implications of these deep changes are truly transformative. A more structurally stable and eventually valuable currency translates directly into improved purchasing power, significantly lower costs for imported goods, and a palpable increase in investor confidence that will inevitably lead to crucial job creation across the private sector. Citizens will soon begin to notice real, daily differences as electronic banking services expand into every corner of the country, and new, tangible economic opportunities emerge in a burgeoning, less restricted private sector. The moment the local population regains fundamental trust in its own national currency, that is precisely when the process of true, lasting economic recovery takes deep root and begins to accelerate. The Central Bank of Iraq has been diligently running robust public education campaigns, specifically explaining the new digital payment systems and the various modern banking tools now available, actively helping to rebuild that essential public confidence. The people of Iraq are demonstrably prepared and eager to embrace a completely new financial chapter, a future defined not by past crisis, but by stability, opportunity, and a renewed sense of pride in their national currency and financial system. This broad public acceptance is a non-negotiable component of a successful currency reform. Global investors are equally focused and paying extremely close attention to these latest developments. For many years, Iraq was automatically categorized as a high-risk investment environment due to historical political instability and stringent currency restrictions. However, with the formal announcement of this new exchange rate framework, that investment picture is changing with surprising speed. International investment funds that specialize in emerging markets are actively beginning to reevaluate Iraq's immense potential across the energy, infrastructure, and technology sectors. If the dinar becomes fully tradable and convertible under the carefully managed float system, these institutional investors could potentially pour billions of dollars into the Iraqi economy, simultaneously driving both job growth and capital value appreciation. A stable, open, and transparent currency environment is a powerful magnet for international confidence, and confidence, in turn, is the primary driver that attracts large-scale capital investment. The actions taken by the Central Bank of Iraq are also perfectly aligned with the broader, worldwide trend toward digital finance and immediate verifiable transactions. Iraq's newly built payment infrastructure provides the capability for instant, full tracking of all transactions, a powerful deterrent against fraud, and a guarantee of full compliance with the most rigorous global financial standards. By linking these advanced domestic systems to global trading networks, the dinar is fundamentally no longer isolated or opaque. It instantly becomes an integral, auditable part of a much larger, global digital economy, where every single exchange can be monitored, verified, and thoroughly audited in real time. This massive technological upgrade not only fully satisfies the requirements of international regulators, but, critically, begins the process of establishing deep, enduring trust among foreign central and commercial banks. Once that foundational trust is firmly established and proven, cross-border transactions involving the dinar can expand dramatically and rapidly, which is the very essence of how genuine, sustainable international currency value is ultimately formed. A number of experienced financial experts are now forecasting that the next few months will serve as an intense testing and trial period. The CBI is expected to conduct a series of detailed internal simulations and then roll out limited, carefully controlled pilot programs to ensure that the new framework operates with absolute precision and stability before any full-scale national rollout. Once the system's stability is conclusively proven and verified, Iraq is positioned to officially implement the adjusted rate mechanism and begin the formal process of international settlements using both the SWIFT and Buna platforms. This critical step will officially mark the dinar's true entry into global trading circulation. From that moment forward, the currency's dynamic value will be determined entirely by genuine market forces, demand, oil output, and investor confidence, precisely the same core factors that underpin the strength of every other major international currency. Some particularly bullish analysts are now projecting that, as the revaluation process unfolds, the dinar could embark on a gradual, multi-year climb toward a fundamental fair market value. Others are projecting a more cautious initial approach, anticipating more modest, sustainable gains that will only strengthen in direct proportion to Iraq's measurable increases in non-oil exports and its continually growing reserves. Regardless of the specific projection, any measurable, market-driven movement in value is a profound signal. It is the tangible progress that investors and analysts have awaited for years. The long era dominated by pure speculation and rumor may finally be giving way to an era of measurable, policy-driven progress. What is arguably the most significant aspect is that Iraq is now entirely controlling its own financial timeline and destiny, proactively acting on a national strategy rather than passively reacting to external pressures or market rumors. In the eyes of many seasoned observers, the revaluation countdown has definitively begun. The profound significance of this entire development extends far beyond mere economic figures displayed on a screen. It represents nothing less than Iraq's strategic act of reclaiming its fundamental economic identity after enduring years of devastating conflict, severe sanctions, and protracted instability. A structurally strong, universally respected currency is a powerful global symbol of national pride, fiscal confidence, and international credibility. It proactively encourages Iraqi citizens to invest and build wealth at home within their own economy, rather than consistently transferring wealth to foreign banks or assets. It actively attracts essential partnerships and trade deals that were previously deemed too risky or simply out of reach. For a nation so rich in history, culture, and natural resources, achieving this level of comprehensive financial independence marks the beginning of a truly new and defining chapter, one that is fundamentally built on global confidence rather than perennial crisis. The structural strength of the Iraqi dinar is designed to become the lasting, tangible symbol of Iraq's comprehensive national renewal. As the world rapidly approaches the official launch date of this new exchange rate framework, all eyes will be locked onto the forthcoming announcements from the Central Bank of Iraq. The global financial community will meticulously monitor every internal test run, every public update, and every policy briefing issued to accurately gauge the progress and stability of the transition. If Iraq steadfastly continues on its current coordinated trajectory, successfully balancing necessary economic reform with essential financial stability, the full benefits of the dinar's market-driven revaluation could indeed begin to materially manifest before the close of 2025. We are, quite literally, witnessing economic history unfold in real time across the Middle East. For those who have been patiently following this complex and long-running story, the coming few months may finally deliver the powerful, concrete confirmation they have awaited: the arrival of a fully international, transparent, and globally respected Iraqi dinar. This is not a story of mere speculation or fleeting rumor any longer. It is a demonstrable, unfolding narrative of real policy implementation, tangible infrastructural progress, and fundamental structural transformation that is occurring right before our eyes. The Central Bank of Iraq has systematically set the stage for something truly extraordinary: the launch of a fully modern, digital-age currency system for a sovereign, resilient Iraq that is finally ready to confidently assume its rightful, influential place on the global financial stage. The next few months are poised to be a period of intense activity and heightened anticipation, culminating in what many believe could be the powerful and symbolic moment that the global market finally witnesses the comprehensive rebirth of Iraq's financial power and monetary independence. The story of the dinar's shift is now a story of coordinated national policy, and it demands our full and continuous attention